and in cost. 4 months ago, when Obamacare opened for business, the Administration had to that date refused to release complete enrollment data or how we were going to get it. Today, we still do not know how much it has cost, how many people have signed up, what coverage is there, because it is, in fact, one of the most opaque government programs to date. What little enrollment data we have is, in fact, not good news. For the numbers to balance, the Administration officials originally claimed that 39% of enrollees needed to be young adults. As of January, only 24% of enrollees were young adults, and many of those young adults may be highly subsidized. Affordable care depends on a healthy young people buying a plan to subsidize the cost of the aged and the sick. It needs enrollment to balance. It isn't something you can force. It is something that must be chosen. In just the last few days, the Administration announced hundreds of millions of dollars will be spent trying to advertise for and recruit those people to sign up for a program that we were told people would flock to because it was good and they needed it. The fact is, the Affordable Care Act is not working, and the numbers are not working. Just yesterday, the Congressional Budget Office released figures that showed dramatic adverse effect on total enrollment and a cost of $2 trillion over the next decade, a $1 trillion difference in their estimates. The fact is, the Act is not performing. CBO is now being forced to recognize, not as the White House would say, that we would excuse me, not what the White House would say, that people are choosing not to work as much and they have flexibility, but in fact, people who want full-time jobs are finding themselves with less than full-time jobs and often without health care. Additionally, the GDP of this country, the engine that creates jobs, is likely to slow by as much as 1% over the next decade. That is a long-term bad news for our economy. This does not mean that the goals of the Affordable Care Act are, in fact, to be given up. This committee and all committees of the Congress have an opportunity to seize better choices in how we fashion health care opportunities for the American people. Health care insurance companies make money off of the Affordable Care Act, and the profit is theirs to keep. In fact, although they are not villains, they certainly were an organization, many organizations that were previously vilified in a big way until it became convenient to get them on board with the Affordable Care Act. Affordable Care Act guarantees subsidies and higher enrollment for the health care companies. Today, we will take a number of items, including our first witness, who will speak to one of the flaws in the system, which is, in fact, a guarantee of profit for the health care providers, one that may cause them to price their product in a way that is not in the best interest of competition. This program is called reinsurance. A key question we will ask today is what will trigger the bailout provisions and how will it take effect? Under the Obamacare's Risk Corridor program, if an insurance company cannot cover the losses of its less successful plans, the Treasury will use taxpayer funds to cover up 80% of the loss. Yesterday, the Congressional Budget Office estimated Obamacare's Risk Corridor would give government a gain of $8 billion in profits. It is important to note that that is based on another program in which every year the American people have found themselves overpriced relative to a shrinking cost of prescription drugs. It is not necessarily a valid model. It certainly has one critical difference, which is Medicare Part D was a program which by definition was new and did not have a large pool of history. In the case of the Affordable Care Act, most of the carriers are providing exactly the same type of insurance to the exact same pools as they always have. CBO's projections also concluded that the Affordable Care Act will cost the economy 2.5 million job equivalents. The agency report found the negative impact effects of the law would be substantially larger than had been believed. When they say substantially larger, let's understand, according to the then Speaker, Nancy Pelosi, the Affordable Care Act was going to create 4 million jobs. It is now going to cost us 2.5 million jobs. CBO is a respected nonpartisan agency on which the ranking member, Mr. Cummings, and I rely daily. But even CBO can only make projections based on information available on hand, and in fact, the Affordable Care Act continues to migrate. It is well known that at the time the Affordable Care Act was being projected, CBO was much more optimistic as to what would occur. In 2011, CBO estimated, as the law was being implemented, that it could cost 800,000 full-time job equivalents. Again, today they now estimate 2.5. CBO's revised estimate is based on a better understanding of the law. Remember, this is a law that we had to pass before we could find out what was in it. More importantly, out of the 2,400 pages of the original law, we have now mushroomed into over 70,000 pages of regulations, and they're still being made. The law's reinsurance program levels a fee on health insurance consumers to subsidize plans in the exchange, meaning people who already had a plan that they wanted to keep, that they may or may not be able to keep, are being taxed as part of the Affordable Care Act. Most, if not all, Americans were unaware that they would be taxed for a program, even if they had a program they liked, meaning that the programs they're in cost more because of an Obamacare tax. The noble aspirations aren't enough to make Obamacare cost-effective or fair, and it's driving up the cost of insurance and driving up the cost of providing health care. Its implementation has been marked by arbitrary and unilateral delays made by the White House, many of them beyond any fair interpretation of the four squares of the law. In closing, I think my colleagues are aware that no one on my side of the aisle voted for the Affordable Care Act. We did not believe in element after element after element of it, even though we would like to have done a few of the elements of this law. Therefore, we are not neutral observers. But CBO is a neutral observer. And I believe that the testimony that's going to be given today by our distinguished Senator from Florida, Senator Rubio, who has proposed a bill to repeal the risk corridors in the President's health care law, comes both with a timely proposal and with a recognition that after you guarantee that insurance companies cannot lose money, it is little surprise that when the President makes changes which will adversely affect the profit projections of insurance companies, you hear not a word. You hear not a word because, in fact, the taxpayer is paying for the arbitrary decisions of the President and, in fact, not the health care providers. And with that, I recognize the ranking member, Mr. Cummings, for his opening statement.
Thank you very much, Mr. Chairman, and I welcome you, Senator Rubio, to this hearing, and it's certainly good to have you here. Today's hearing is our committee's 24th on the Affordable Care Act. And after this hearing ends, we will be holding our 25th this afternoon. I'm not sure what the line is between oversight and obsession, but our committee has obviously crossed it. I'll begin, as I do at all of our ACA hearings, by highlighting the single most important fact before us today. Millions of Americans are now receiving critical medical care they did not have before. I know that is important to you, Senator Rubio, and it should be important to all of us. people who are sick, trying to get well, people who are well, trying to stay well, are getting care that they could not receive before. No more discrimination against people with cancer, diabetes, or other pre-existing conditions. That is so important. No more discrimination against women. Free preventative care for millions of people. Billions of dollars in rebate checks sent to consumers across the country, in all of our districts, and in Florida. And the lowest growth in healthcare costs in 50 years. These amazing results are not happening because of Republican efforts. They are happening in spite of them. Republicans have done every single thing they could do in their power to repeal, defund, and eviscerate the Affordable Care Act. And sadly, so sadly, today's hearing is just the latest example. According to press reports, while House Republicans were at their retreat last week, they were desperately searching for something, anything, to attach to the debt ceiling legislation. They could not simply pay our nation's debts. They had to come up with something, anything, to politicize the issue. At first, they discussed the Keystone Pipeline, but then they settled on the issue before us today, the so-called Affordable Care Act bailout of insurance companies. They seized on several provisions in the ACA designed to distribute risk across insurance companies and prevent the artificial inflation of premiums for consumers. Under one of these provisions, called Risk Corridor Program, the government collects funds from insurers with large financial gains and uses those funds to make payments to insurers with large losses. The irony of this Republican attack is that the Republicans first proposed these measures as part of the 2003 law to create the Medicare Part D drug benefit. It was a Republican idea. Senate Minority Leader Mitch McConnell and House Speaker John Boehner both voted in favor of these provisions. And so did Paul Ryan, the chairman of the Budget Committee, as well as our chairman, Chairman Issa. And at the time, Republican Senator Chuck Grassley described the Risk Corridor Program as one of the, quote, incentives that the Secretary can use, end of quote, to get new plans started, quote, in a strong way, end of quote. He said, and I quote, "These plans are enabling many beneficiaries to lower their out-of-pocket costs substantially, and that's particularly true for beneficiaries with chronic illnesses," end of quote. I didn't say that. Senator Grassley said that. The Risk Corridor Program was a good idea during the Bush administration, and it worked. Rather than a bailout for insurance companies, the program has resulted in $7 billion in net gains to taxpayers. But now, since these same mechanisms are part of the Affordable Care Act, Republicans argue that they are a bailout for insurance companies. Senator Rubio, who I have great respect for, calls them, and I quote, government favoritism and corporate cronyism at its worst, end of quote. He claims that we're getting, quote, closer to the reality that billions of dollars in taxpayer money is going to be used to bail out these exchanges, end of quote. And he introduced legislation to repeal this program. Just this week, however, the nonpartisan Congressional Budget Office issued a new report that completely obliterates this argument. CBO projects that the ACA risk corridor program will result in net gains to taxpayers of $8 billion over the next 10 years. So where's the bailout? There isn't one. Just as in the Medicare Part D program, the Affordable Care Act Risk Corridor program will save taxpayers money. And if we were to adopt legislation to eliminate this program, billions of dollars in savings would simply disappear. I ask unanimous consent, Mr. Chairman, that the CBO report be entered into the official hearing record.
Without objection, so ordered.
Thank you, Mr. Chairman. Finally, in conclusion, I am certainly no advisor to the Republican Party. But if you're trying to create a new image for yourselves, one of truly caring for people facing hardship, why in the world would you eliminate a program that you invented, that has been working for nearly a decade, and that saves taxpayers billions of dollars? And why would you increase premiums for Americans across the country in the process? This approach makes no sense unless you are putting politics ahead of people. So for the next week, I'd like to make a suggestion. Rather than holding our 26th hearing on yet another false criticism of the Affordable Care Act, I ask that we turn to more constructive efforts. Let's hold a hearing to help our constituents, not just the constituents from my district, from all of our districts. Let's get ourselves involved in constructive efforts to help our constituents learn about the health care coverage they can now obtain, and let's help them enroll. That would benefit them more than anything we will do today. And with that, Mr. Chairman, I yield back.
I thank the gentleman. Members may have 7 days to submit opening statements for the record. We now go to our first panel. After Senator Rubio, we will immediately go to a second panel, and I would advise all witnesses that it is not customary to interview members of the House or the Senate afterwards. And I say this because we did have our counterparts from the Senate for a very long back and forth just a few weeks ago, but that was an exception. Senator Rubio comes today to give testimony specifically on his proposal, but more broadly on his study of the ongoing implementation of the Affordable Care Act. Senator Rubio, we appreciate your being here. You will be welcomed back for the 26th and the 27th and the 28th hearing if it becomes necessary in order to do appropriate oversight of this new law. Senator, you're recognized.
Thank you, Chairman Issa and the Ranking Member, Representative Cummings, for holding this hearing and for inviting me here today. I'm a frequent watcher and a loyal viewer of this committee on C-SPAN, so I appreciate the invitation to be here with you today. My focus of my remarks this morning is going to be on Section 1342 of Obamacare, which I, in partnership with your colleague Tim Griffin of Arkansas, have introduced legislation to repeal. Now, Section 1342 deals with what already has been described as risk corridors. Now, under normal circumstances, risk corridors are a valid program. They provide insurers insurance against unanticipated major losses caused by anomalies that may occur in a competitive insurance market. This prevents disruption in services, for example, for patients and for customers. And if they're budget neutral, by the way, these risk corridors can actually protect taxpayers from assuming too much of the risk. The problem with a risk corridor in Obamacare is that this is not a normal circumstance. First of all, its failures are not anomalies. They are across the board. It's not one or two companies that are miscalculating on Obamacare's long-term prospects. It's the entire industry that's being affected by its failures. And by the way, Obamacare and its exchanges are not a true competitive insurance market. In fact, it has increasingly become more like a high-risk pool. The risk of a bailout has always been high. As many of us predicted, these exchanges have not attracted enough young and healthy people to sign up. But the chances of the bailout have increased significantly in the last few months due to several unilateral actions taken by the President and by his administration. For example, this past November, in response to a public backlash from people who were losing their health plans and providers, President Obama delivered a speech in which he announced his unilateral action to, quote, fix his broken promise that if you like your plan, you can keep your plan. That same day, however, the Department of Health and Human Services issued a press release to go with the President's speech. And in that press release, they added a critical detail that was missing in the President's remarks. And here's what the press release said, quote, though this transitional policy was not anticipated by health insurance issuers when rate setting for 2014, the risk corridor program should help ameliorate unanticipated changes in premium revenue, end quote. Now, what this means is pretty straightforward. The rates being charged by the insurance companies and the exchanges were based on a certain number of young and healthy people signing up. But because that isn't happening, companies in the exchange will not be able to offset the costs of insuring older and less healthy individuals. And as a result, the risk corridor will be needed to bail out the companies for their losses. Now, the administration and the law's supporters deny that this is where we're headed, but the proof already exists that a bailout will be required. For example, earlier this year, health insurance companies had to file their key disclosure documents with the Securities and Exchange Commission. In it, they had to explain to their shareholders what Obamacare will mean for their bottom line in the coming year. And here's what it said. It will mean losses. That's why, based on these filings, the credit rating agency Moody's has downgraded the outlook for American health insurers to negative status. So health insurers are leveling with their shareholders about how Obamacare's failures will affect their bottom lines, and credit rating agencies are leveling with investors about how Obamacare's failures affect the health insurance industry. Now it's time for the President, for Secretary Sebelius, and for Obamacare supporters to level with taxpayers about the fact that their hard-earned tax dollars will soon be needed to bail out the Obamacare exchanges. The supporters of Obamacare have defended the risk corridors by citing how it has worked for Medicare Part D. But these are two fundamentally different programs. Medicare Part D deals with defined, a limited, and a predictable population of seniors. Insurers knew who was going to sign up, and they had a pretty good idea how much they were going to cost to insure. And so they could price for it accordingly. But Obamacare exchanges deal with an open-ended, broad, and unpredictable group of enrollees. No one knew who was going to sign up, how many would sign up, and how much they would cost. But what they're now finding out is that the pool of enrollees that is signing up is smaller, older, and unfortunately sicker than what they had priced for. And soon they will be coming to Washington for their bailout to cover their losses as a result. Now, the law has a host of other problems. For example, as the chairman has already pointed out, just yesterday, the Congressional Budget Office found that Obamacare will cost millions of Americans their jobs, and it will add trillions in additional deficits. That, by the way, is why a growing number of Americans have come to realize that this law has so many flaws that it cannot be fixed. Now, I respect the fact that there are some who still hold out hope that Obamacare will work, just like there were some in Denver this Sunday still holding out hope that the Broncos could come back and win in the fourth quarter. But no matter how you may feel about the law, we should all be able to agree that the American people should not have to pay for another taxpayer-funded bailout. Refusing to take that possibility off the table is like basically telling the American people that some are so devoted to protecting Obamacare that they do not care how much it will cost taxpayers. The bottom line is that it is not right to allow a powerful industry to use its influence here in Washington to protect itself from the consequences of Obamacare. And it is not right that hardworking Americans are forced to pay for it. So, Mr. Chairman and Ranking Member, I appreciate the opportunity to testify before you today, and I look forward to coming back. Thank you.
Senator, we thank you for your input, we thank you for your insight in this area, and we thank you for being a loyal watcher. We'll take a short recess and set up for the next panel. We now welcome our second panel of witnesses. Mr. John Goodman is President and CEO of the National Center for Policy Analysis and Senior Research Fellow at the Independent Institute. Mr. Douglas Badger is a former senior White House advisor for health policy to George W. Bush. And Mr. Timothy Joyce is professor of law at Washington and Lee University. I want to thank all of you for being here, and pursuant to the committee rules, would ask that you please rise to take the oath and raise your right hands. Do you solemnly swear or affirm that the testimony you are about to give will be the truth, the whole truth, and nothing but the truth? Okay, please be seated. Let the record reflect that all individuals answered in the affirmative. Since we have a full panel and the committee rules call for 5 minutes for opening testimony, I would ask that you observe the lights and stay as close to the 5 minutes, recognizing that your entire opening statements will be placed in the record along with additional extraneous material should you choose to add it. And with that, we go to Mr. Goodman.
Mr. Chairman, members of the committee, the people who created the health insurance exchanges were apparently of good intention, but they created perverse incentives for those at the bottom. And when people act on those perverse incentives, they are doing things that create perverse outcomes. The insurers are prevented from pricing risk accurately in the health insurance marketplace. As a consequence, people who are relatively healthy are overcharged at the point of enrollment, and people who are relatively sick are undercharged. This gives every insurer an incentive to attract the healthy and avoid the sick, because they make profits on the healthy and they make losses on the sick. The way they behave in the face of this incentive contrasts markedly with insurers in other markets. All of you have seen casualty insurers advertising on TV. You've seen the actor in front of the town that was wiped out in 2 minutes, telling you, with Allstate, you'll be in good hands. You've seen advertisements with car accidents. You've seen the Affleck ads, the Chubb ads. And every one of these ads pictures some bad thing that could happen to you. And the message in these ads is, if the bad thing happens, the insurer will be there for you. You're never, ever going to see an ad like this by insurers selling insurance in the exchange. You're never going to see an ad that says, if you get cancer, we're going to be the health plan for you. Or if you get heart disease, come to us. Because they're running away from the sick instead of trying to attract them. Now, the insurers have their benefits regulated down to the smallest items, and yet they are free to choose their own networks and their own premiums. What they are doing is they're selecting premiums and networks in order to attract the healthy and avoid the sick. They have become convinced that the healthy buy on price, and that only sick people look really closely at networks. And so we're getting a race to the bottom on the networks. And Blue Cross, for example, of California has only about 1/3 as many doctors in its exchange network as it does in its normal network. We're seeing these networks leave out the best hospitals and the best doctors. Now, on the buyer side, it makes sense. If insurance is guaranteed issue, if it has nothing to do with health condition, why wouldn't I buy on price? And then if I get sick, if I get heart disease, I'll look around for a better plan. Or if I get cancer, I'll look around for a better plan. And what we all forget is that if everybody's chasing the healthy person, when I do get cancer, there may not be a plan there that provides decent cancer care. In the exchange, people who are overcharged will tend to underinsure. People who are undercharged will be inclined to overinsure. People with serious health problems will choose the gold and platinum plans. People who are healthy will choose the bronze plans, or more likely, they will simply stay uninsured and wait until they get sick to enroll at all. To make these conditions even worse, we have outside groups who are allowed to do things that I regard as unconscionable. The federal risk pool is about to dump all the enrollees in the risk pool into the state exchanges. All of the state-level exchanges are about to end their risk pools and dump high-cost enrollees into the exchange. We have cities and towns throughout the country that have unfunded post-retirement promises, and they are getting ready to unload on the exchanges. The city of Detroit is sending 10,000 retirees who are older and therefore more costly to the exchange. We have businesses thinking about doing the same thing, ending their post-retirement health care plans. We have all the people who are characterized as job lock employees who are working only because of the health insurance, and they will leave their jobs and enter the exchange. And then, as I understand it, hospitals now are allowed under the Affordable Care Act to actually sign people up in the hospital bed and with the hospital paying the premium. In my written testimony, I don't talk about all the things that employers might do, but if you'd like for me to get into it, I think that there are many things they can do to game the system, and we're going to see it happen. In summary, I think that we have underestimated the costs that are being piled onto the exchange, not overestimating. I think that this is a potential large drain on the taxpayer. And the remarkable thing is that this is a small market, less than 10% of the private insurance population. It was working reasonably well, and what we have done is unconscionable, bad policy, and bad ethics.
Mr. Badger.
Thank you, Mr. Chairman. Ranking Member Cummings.
Could you pull the microphone just a little closer, please?
Thank you.
Thank you.
And distinguished members of the committee, thank you for inviting me to appear today to discuss provisions of the health care law that have been characterized as insurance company bailouts. People generally understand that the health care law includes subsidies for individuals who buy insurance. It should not provide subsidies to corporations that sell it. It has been argued that insurers can't make a profit without such subsidies. CBO's most recent estimate on risk orders suggests that in the aggregate, issuers in the exchanges will realize premium revenue that substantially exceeds their projected costs. Their expected profitability is attributable to powerful tools contained in the law. These provisions help companies that sell through the exchanges prosper without the need for various corporate welfare provisions. The law has handed such insurers enormous opportunities to increase their revenues and attract more customers, including healthy ones. It subsidizes the cost of their product. It penalizes people who don't buy their product. Regulators have required the cancellation of non-grandfathered individual and small group policies and will cancel more later this year, leaving these people with little choice but to obtain insurance coverage through the exchange. It is an enormous government effort that involves driving business to that segment of health insurers that sells through the exchanges. Collectively, these provisions should be sufficient to induce millions of people into plans sold through the exchanges without the need for additional government intervention. The law's premium stabilization provisions raise concerns because they create the possibility of backdoor assistance from taxpayers to insurance companies and the moral hazards that result. The law's risk corridors are among these provisions. CMS's decision to permit risk corridor disbursements in excess of receipts is what I find troubling. It creates the possibility that government will use public money to mitigate losses incurred by insurers who improperly price their products. CBO's estimate that risk corridors will save the government $8 billion over 3 years offers some comfort, but CBO, as we all know, is often wrong, and its new estimate is accompanied by a number of caveats. There's simply too much uncertainty surrounding the law's implementation for Congress to rely exclusively on this latest CBO estimate, which is subject to change without notice. Instead, I believe it should amend the Act either to repeal risk corridors or, in the alternative, to stipulate that aggregate risk corridor disbursements cannot exceed receipts. If CBO is correct, then the government will get its $8 billion in deficit reduction. If it is wrong, taxpayers will be protected against unforeseen spending. Now, some might argue that even a change this small and, in my view, this prudent shouldn't be taken because insurers weren't expecting the change when they established their 2014 premiums last spring. That's not a line of argument that government has found terribly persuasive when applied to individuals and small firms. Millions of individuals and small businesses were expecting to renew their coverage. They didn't expect to have it canceled, but that didn't stop the government from ordering the cancellations. More cancellations will come later this year, according to CBO, meaning that people will lose their coverage. That isn't their choice, but it is their fate. Put on a personal note, my mother-in-law expected to continue to receive care from the area's largest health system. She didn't expect her Medicare Advantage plan to drop the system from its network, but that's one consequence of the Medicare cuts in the law. Millions of Americans have been asked to adjust, adapt, evolve, to endure adverse consequences without complaint and without relief. They're dealing with the unexpected. Congress should ask no less of insurance companies. Insurers should be able to make a profit in government marketplaces even if government repeals risk corridors or prohibits expenditures to exceed receipts. The law's combination of mandates, subsidies, cancellations, and tax penalties can be expected to induce or compel millions of people in relatively good health to buy their product. Individual competitors will suffer losses if their costs exceed their revenues. That is not the taxpayer's problem. The government has established its marketplaces. Let the insurers compete.
Mr. Joyce.
Thank you, Mr. Chairman, Ranking Member, members of the committee. The Affordable Care Act's risk corridor program is not a bailout. It is a rational approach to risk sharing in a public-private insurance partnership. The ACA's premium stabilization programs have arguably already saved consumers and the Federal Government billions of dollars. And as we've heard several times today, the CBO is now projecting that the program will produce $8 billion in revenue for the Federal Government over the next 3 years, a very strange bailout. But the risk corridor program is, moreover, a commitment of the Federal Government to private businesses, and breaking this commitment would not only be a breach of contract, it could possibly be an unconstitutional taking. The Federal Government must honor its debts, and it must honor its contracts. The ACA's risk corridors are modeled after the risk corridor program in the Bush administration's Medicare Part D drug plan. The Bush administration used risk corridors and reinsurance to get private insurers to offer a product that they had not offered before and didn't know how to price. Insurers that offered Medicare Part D drug plans would price their premiums based on actuarial estimates of what providing the coverage would cost. If actual costs were higher than expected spending, the government would absorb part of the loss. Conversely, if actual expenses fell below expected spending, the government would recover excess gains. Additionally, the Bush prescription drug legislation reinsured 80% of all drug costs above a catastrophic threshold. These provisions, still in effect today, have been a key to the success of the Part D drug plan. Moreover, the Part D drug risk corridor program has turned out to be a net moneymaker for the Federal Government in every year it has been in effect. There is a long history of the Federal Government sharing risks with private insurers. Federal subsidies to the National Flood Insurance Program, which Senator Rubio voted to extend last week, have for 35 years enabled private individuals to purchase flood insurance through the Federal Government. The Farm Bill passed by this body last week included federal reinsurance for crop insurance. The ACA encourages private insurers to offer individual market coverage without underwriting for pre-existing conditions through the exchanges. Congress built on the experience of the Medicare drug plan, creating a permanent risk adjustment program and temporary reinsurance and risk corridor programs. The Affordable Care Act risk corridors are, in fact, less generous than the Bush administration's programs, even though the risk that these companies are taking on is much greater, but they are intended for the same reason, to achieve stability for insurers and lower premiums for enrollees. In fact, because insurers did not have to charge a risk premium for this new product, exchanges for premiums for 2014 came in 16% below CBO projections, saving the Federal Government billions of dollars. A bailout occurs when the government intervenes to save a business from its own unwise decisions without a legal obligation to do so. With the risk corridor program, however, the government has encouraged insurers to take a risk by sharing, not assuming the risk. The Federal Government has entered into a contract with insurers to provide coverage through the exchange. Insurers relied on the premium stabilization program in setting their premiums. But most importantly, removing the backstop of the risk corridor program would put private insurers at higher risk, possibly leading to insolvencies that would need to be covered at great expense by the state and federal governments. It would lead to fewer participants and higher premiums in 2015. Since the full cost of premiums in the exchange is borne by the federal government, once lower and middle income enrollees pay a set percentage of their income, the cost of this program to the federal government would increase dramatically. The Risk Corridor program is a commitment of the United States government to private businesses which it has partnered with to offer a public service. It is modeled after a successful program created by the Bush administration. Just again, as the United States must not default on its net debts for narrow political purposes, it must not breach its promises. Doing so is not only a breach of trust, it is also a foolish and short-sighted public policy. Thank you.
Thank you. I'll now recognize myself for a series of questions, and I have a lot of questions. Mr. Jost, just so you understand, and you can comment back for the record, but I read the elements of the bill. The insurance companies are entitled to absolutely nothing unless appropriations appropriates money. So technically, we can take the tax, take all $16 billion of the tax, and pay none of the $8 billion. Statutorily, we say we do it, but it's subject to appropriation. So I know the President's a constitutional scholar. I'd appreciate it if you'd answer for the record on your view of it after researching it. Mr. Goodman, I want to go through it.
Can I respond to that, or will I have time later? Because
no,
there is a
you helped write the bill, so the fact is that's what the bill says. Mr. Badger and Mr. Goodman, I've got a bunch of questions and very little time. Let me just understand a couple of things that the public needs to understand that are tangential but are part of this. Yeah, there's an estimate of $16 billion to be gotten from overpayments, meaning I pay too much because I'm in Obamacare. I pay too much. The government doesn't get it rebated when, in fact, I paid too much for my, I think it's a gold plan that we're required to buy. I pay too much, the government takes that money. They don't let me get the discount for overpayment. Is that correct?
I think that's right.
Okay. They then, let's just say the Blues, United Health, any of them, they have another one that's a loss leader that they charge too little on. They get my money for the one when they were trying to buy market share. Is that right?
That's right.
Now, it could be the reverse. I could be getting the loss leader and somebody else could be paying. So the whole this whole balancing act includes the assertion that you take from one group of people who pay too much and give it to another, give it back to the companies. Additionally, aren't they taking $63 from every insurer in the way of a tax so that every American is paying $63 to fund exchanges?
For the next 3 years, yes.
For the next 3 years. So Americans who are losing the health care plan they wanted, the doctor they wanted, and so on, but have a private plan are paying $63 to run these exchanges. It's just another tax, a hidden tax. Isn't there another $100 billion or so in health insurance taxes that are also being paid that are funding Obamacare?
Yes, everybody is being taxed. Even the Medicare Advantage plans, the Medicaid managed care plans are all being taxed.
Okay, so Americans are seeing part of their health care costs going up, in fact, for taxes that are being paid for subsidies like the underwriting here in this bill.
Yes.
Okay. It is amazing that they passed a bill that could hurt so many people, including the people who already were paying out of their own pocket for their insurance. Mr. Badger, you were active in Medicare Part D, and you saw it. Is it true that Medicare Part D has a substantial difference in what we did or didn't know about Medicare Part D versus what we did or didn't know about these plans?
Yes.
And in the case of Medicare Part D, it has been giving us revenue. Is that correct?
That's correct.
And isn't that revenue essentially from overcharging for Medicare Part D?
It's revenue that derives from the fact that insurers' actual revenues exceeded their costs by more than they expected.
So the source that CBO is scoring, and I'm not going to get into as many things as some other members might, but the source of this revenue that we're talking about coming to the government as a good thing is, in fact, taxing our senior citizens by, whenever there's an overpayment, too much for the insurance, instead of rebating it back to the senior, we're taking it as tax revenue, right?
That revenue is collected and if not distributed.
So our seniors are being taxed on their paying too much for Medicare Part D, right?
It has to calculate into.
So it isn't all that good a program when it goes on in perpetuity, is it?
A risk order program, I would agree. It's not when it goes on in perpetuity.
Okay. So if we were going to do a risk corridor program, wouldn't it be fair to make sure that at least the excesses and the reductions are fairly distributed back to the insured rather than going to the Federal Government as just another tax on people trying to buy necessary health insurance?
I hadn't thought about that approach, Mr. Chairman, but at the very least I would say that the government should not pay out more in disbursements to insurance companies than it collects.
Well, you know, being a bleeding heart conservative, I guess here, I'm trying to figure out why people's necessary health care should be increased in price, called to revenue, so that if CBO is right, what we're really doing is taxing their health care and making it more expensive. And if they're wrong, what we're doing is taking the American people's hard-earned tax dollars to bail out insurance companies. We really lose either way as buyers of insurance. Isn't that true, Mr. Goodman?
I would say so, yes.
Mr. Jost, for the one item I wanted to have you respond for the record, but any of the questions I ask now, if you could briefly comment on, I'm certainly happy to hear it.
Well, the purpose of the Affordable Care Act was to cover people in the United States.
Now, my questions, please, were all about, aren't we causing seniors to pay too much? Aren't we taxing health care? I mean, you helped write this thing, and I'm seeing a series of taxes on hardworking Americans to pay for this that hardworking Americans didn't know about. If you want to comment on that, that was my question.
I actually had nothing to do with writing this legislation. But
you've previously testified on a number of, I thought you were more involved. With that, I yield to the gentleman from Maryland for his questions.
Mr. Jost, please, first of all, thank you for clearing up that you didn't write the legislation, wasn't involved in that. And I want to thank you for your scholarly work. Now, would you now respond? I think you wanted to respond to something that you didn't get a chance to respond to that was asked by the Chairman.
Yeah. An issue that I thought would come up today, and the Chairman just raised it obliquely, was a CRS report that was made public yesterday that was actually passed on to the majority 10 days ago, but was leaked to the press yesterday and first seen by minority staff and myself, claiming that appropriations are necessary before the risk corridor program can be operationalized. And I would just refer this committee to the case of Salazar versus Rama Navajo chapter from the Supreme Court in 2012, in which the Supreme Court said the United States are as much bound by their contracts as are individuals. Although the agency itself cannot disperse funds beyond those appropriated to it, the government's valid obligations will remain enforceable in the courts. For better or for worse, the Federal Government, Congress, through this statute, has made a commitment to the insurers that if you enter this risky market, we will share the risk. We will not free you from the risk because the risk remains shared. Companies that underprice their products will not make a profit, but the government is sharing the risk to draw them into this market. At this point, after the insurers have set their rates, after they've gone into the market, to turn around and tell them that we're not going to honor the obligation set out in the law, I think would be unconscionable.
Let me just ask you a few questions to follow up on that. Medicare Part D was one of President Bush's signature legislative initiatives, and it was supported by Senator Mitch McConnell, John Boehner, Speaker Boehner, Majority Leader Cantor, Budget Chairman Ryan, and Chairman Issa, all of whom voted for the bill. Medicare Part D included risk adjustment, reinsurance, and risk corridor programs. Is that right, Professor?
That's correct.
Those are the same programs that Republicans are now calling a bailout now that they are part of the Affordable Care Act. I don't understand why Republicans were for these provisions before they were against them. But one real difference is clear. They are obsessed with destroying the Affordable Care Act, and this is just a new proposal to do just that. Professor Jost, can you explain why these risk mitigation programs were included in Medicare Part D? How did these risk mitigation programs impact the participation of insurers and the cost of premiums? And finally, do the Affordable Care Act's risk mitigation programs work in the same way to increase participation of insurers and stabilize the cost of premiums? You got those three questions?
Yes. The problem that the Bush administration faced in 2003 is that it was asking insurers to create a product that they had not previously marketed, a prescription drug plan for senior citizens. The 3 Rs in the Bush drug plan served exactly the same purpose that they do here. They provided reinsurance for catastrophic costs. They provided risk corridors so that if insurers who priced their products inappropriately to begin with could have some comfort that they would not suffer great losses, and risk adjustment to move, although they did it differently, but risk adjustment to move profits from the insurers who ended up cherry-picking to those who didn't to deal with the problem that Dr. Goodman raised. Exactly the same thing happens under the Affordable Care Act. As the Chairman pointed out, there are fees that are imposed on insurers throughout the group market and the individual market to move funds not just to the exchanges but to all individual insurers to reinsure high-cost cases to try to make the individual market work, which it hasn't in the past. There is risk adjustment so that if insurers cherry-pick, they will have to pay the ones who take on the high losses. And then there are these risk corridors, which again are there as kind of a flywheel to stabilize the program. It was mentioned that risk is going to be higher because of the transition policy announced by the Obama administration. The GAO factored that into account. It said that would decrease the revenue of the Federal Government from the program from $8.5 to $8 billion.
And the risk corridor program for the Affordable Care Act is 3 years. Is that right? It has a limit of 3 years?
That's correct. It's only 3 years. So is the reinsurance program.
And what about the prescription drug program?
That has turned out to be indefinite.
Indefinite?
Yeah. I mean, it's still in effect.
Okay. Anything
It's
else?
actually still making money for the Federal Government.
Very well. That's the same one that Senator Grassley applauded as being so great.
That's correct.
Very well. All right.
Thank you, Mr. Cummings. And Mr. Jost, I was informed by the majority staff, Mr. Jost made a comment that they'd had this for quite some time. They indicate our staff just got that yesterday as well. It was originally requested by the Energy and Commerce Committee. And without objection, I'd go ahead and like to enter the report into the record so everyone has access to it.
I was informed that no minority staff of any committee had heard it and seen it heretofore.
Thank you. And at this point, we'll go to the gentleman from Florida, Mr. Micah.
Well, thank you, Mr. Chairman and members of the committee. First of all, I have the greatest respect. We've had a great working relationship with the ranking member, Mr. Cummings. But I really have to disagree with him in some of his opening comments. I made a few notes. He gave this soliloquy about how we're covering all of these people. Actually, if you look at the facts of the impact of Obamacare, I have to say this, that the facts differ with what the ranking member said. In fact, that even if you took the best estimates of 2 million sign up, you've got about 40 million people who we've left behind with health care. Republicans want to find a way to provide health care in a cost-effective manner in which we make affordable health care available, and that was the intent of this. Not the 2 million they've signed up. Mr. Badger just testified, didn't you, Mr. Badger, about how many people are, it's just a big cost-shifting scheme that we've got here. You told me Detroit, maybe, was it you or Goodman? You said Detroit 10,000?
Yes.
Here, I'm a victim. I didn't want to sign up for that. The Chairman had, he's got the gold plan. I think I got the bronze plan. I'm getting screwed, excuse the terminology, before the committee. I'm paying more. My deductibles are 3 times as much. I'm forced on it. But you're telling me here that in testimony we've heard today, we've got cities shifting pensions plans. We've got states dumping into the exchange. That's the great success, shifting the cost. Is that what you testified to, Mr.
Yes, it is, and I think
this was predicted to be a train wreck. This is a massive train wreck, and you know, you can only put so much at even at Thanksgiving. You can only put so much parsley around the turkey, and you still got a turkey. This is a sinful that we're spending billions of dollars to set up this mess. That the government is the worst at setting anything up, and we've seen that from a technological standpoint, but from a coverage standpoint of signing up people. Okay, here's CBO. The Chairman started out today. This is the great success. We have displaced 2.5 billion people in work. Did you see this, Mr. Goodman?
Yeah.
I think that's an underestimate. Because if I was in business, I was in the private sector, the first thing you do, the 29 hours, he's forced already millions of people into part-time employment. Would you agree with that?
I would.
Yeah. They've been doing it. They did it in anticipation. These are full-time jobs, CBO. Here, I want to put this in the record, too. But in 2024, there'll be 31 million people still uncovered in a decade. That's sinful. That is a shame. Again, and we're trying to cover people in a decade. Did you agree with this, Mr. Goodman? Mr. Badger, did you see this?
Yes.
Okay. So, here's another point. Surprise, millions of people who like their insurance plan will lose their plan. They predict, and I've heard it's 5 to 6. They're predicting 6 to 7 fewer million people will have employment-based coverage. This is again, CBO, not mine. This isn't my estimate. And then a fourth point, I'm going to make 5 of them out of this report. Obamacare reduces the incentive to find and keep a job. Not my comment. Boy, this is great, getting people productive, employed, self-reliant, contributing to society, and being able to support their family. This is a shame. And then finally, here people are struggling to put gas in their car, pay their fuel bills, keep their kids in school, trying to make it, and the CBO says their paycheck, wait, listen, will be borne primarily by workers in the form of smaller after-tax compensation. Do you agree with that?
I do.
Mr. Goodman?
I do.
Mr. Badger? This is a disaster for the working people of America and people without health care who need health care, who should be covered by health care, and then shifting the burden. This is just a big scheme to shift costs that's failed. Is that right, Mr. Goodman?
Well, I don't know if I'd use those exact words.